First up, our stock of the day, which was on our crash watch list. ResMed reporting fourth quarter results, posting a 12% net profit increase. The sleep treatment specialist gross margins fell, though, 2.3%, largely due to supply chain expenses. Broker RBC Capital Markets saying the results fell short of expectation. Shares trading pretty flat today in a strong market. Jumbe, what did you think of the quarterly update from ResMed and the stock at these levels?
Of course. So the quarterly result, it has fallen short of consensus expectations, so analyst expectations, by about 3 to 4%, and not massive, but it's a little underperformed. And however, normally, when a growth stock that missed analyst expectations and you expect share price to be sold off significantly, but it hasn't, because everyone is expecting a poor result. We know the reason the result was poor was mainly because the supply chain issues, that they couldn't get their hands on the chip because of the chip shortage globally, and so that they just couldn't simply meet the demand. Demand is so strong. Remember, their key competitor has had a product recall, and then the competitors continue to have the product issues. So they have so much demand for their product, and they just couldn't meet that demand. So, and that has been very well flagged, so people know. So that's why, result comes through. Everyone has been waiting for this poor result, and it provides a great buying opportunity. In terms of where the stock's at, it has been sold off like the rest of the sector. While the earning is actually still growing quite reasonably. So for me, ResMed is a core holding. It's a strong buy, and this is probably one of the worst result you'd expect. And for a worse result, it's still growing. So it's one of those structural leaders, and then at this point, it looks pretty attractive.
Okay, Adam.
Yeah, I love this one. I've been on record for many years saying that this is a fantastic one, and I'll go on record again to say I think that ResMed is one of those ones that could be the next CSL. So that's sort of where I put this stock in most of my clients' portfolios. Obviously, the revenue was a little bit. I mean, the revenue was well flagged. Income and gross margin, a little bit lower than expected, but it's a pretty tough time for these guys. And I think, with the stock down around about, was it 12-14% the last 6 months? I think it just provides really good opportunities. These guys usually do beat on earnings on a regular basis. And I think the dividend was up as well. So, look, really comfortable with it. I mean, these things do, they can't always go in a straight line. And as you can see, ResMed's had a good run, come back a little bit. And I think there's some pretty good support there at about $30, even 28, somewhere around in there. You'd definitely be backing the truck up on that one.
Okay. Would you do it at this level, $30, $31?
Look, yes, if you're comfortable with it. I think you could probably put it closer to $30. I think there's on the chart, there's a little gap there that needs to be filled, and I think that's around that sort of $28 to $30 level. So okay. I'm comfortable with the stock. I really like the business, and it's fantastic. But I just think, you could probably get it a little bit cheaper over the next coming couple of months.
Okay.